Hello everyone, welcome to another video. This is a video that's going to be about objectively defining displacements. Okay, now displacement, as you all know, is a very important factor that needs to be there in price in order to determine whether a high or low has indeed formed or not. Okay, now you can also see that I have an indicator that I've developed as per my suite of algorithms, which calculates the statistical times, or rather the statistical levels for this particular day uh, on basically every asset class that's there on TradingView. And you can see that it calculates the manipulation levels and the distribution levels, right? So the ranges can essentially be used as a way of determining reversals, okay? And also the manipulation. Now, on the bottom right corner, you can see that we have the market phase distribution continuation, or you also have the sub intervals of time, which gives you late distribution or continuation, right? So everything is programmed, everything is done nicely. So if you do want it, you can definitely get it in the suite of algorithms. Link is in the description below. Okay. Lifetime offer is still running. So it is running until January 2025. The more users we get, the better, because you can't go wrong with statistics. Okay. So yeah, in this video, we are going to be diving in to actually learning about the entire prospect of understanding what we're going to understand displacement. Okay. Now, displacement, as you can see, is essentially when price closes through more than two candles. Very simple, right? But look, this is what I mean. Okay. Can you see how each of these candles here, except this green color one, right? Each of these candles, they are displacement candles. Okay. They are displacement candles. So when you think about the requirement for it to be a displacement candle, we are thinking to ourselves, okay, you know what? If I am thinking that this is a displacement, I am thinking that price is going to close through. Listen carefully. I am thinking that price is going to close through more than two candles. Okay, more than two candles. Now, what does that mean? It means like this. Every displacement candle you can use as a sort of a POI, right? Now think about it. If you drop down to the five, okay, and on the 5 minute chart, if you, for instance, go down here, can you see how this displacement candle went down? Yeah, it's going to be a candle that you're going to use to sell, of course. But what about the guys that actually go higher, like this? What you're going to do is you're going to have a 20 candle look back, okay, a 20 candle look back, and the minimum candles that are displaced is going to be two, meaning you have the closing price. For instance, you have this closing price over here, yeah, right there, and you have this closing price over here. Price displaced through these two closing prices, yeah. As a result, that is a displacement. This is a displacement. Why? Look at this one. It closed through this closing price. It closed through this closing price. It closed through this closing price. Now, the entire premise of this closing price business is essentially to close through support and resistance levels. The willingness of price, right? The willingness that price has to close through these important levels. Okay. We're looking at the willingness that price has to close through these important levels. And you can see it works every time. You can see every time there's a displacement candle, there was a local reversal. Yes, there's local reversal, local reversal, local reversal, 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 reversal. Everywhere there's a reversal. Here also reversal, reversal, right? So that is quite important to actually understand. Okay. When we are talking about it from the perspective of, let's say, without an indicator, without an algorithm, right? It's something like this. You have, let's say, something like this, right? So you have closing price right here. You assume that it's going down, closing price right here. Okay. Now, with this information that you have now, what you're doing is you want that one single candle, that one guy on a fractal level, ideally high time frame, but you want that one guy on a fractal level to actually do this, on at least two of them. Okay. Now, take a look at gold, for example, right? Now, gold, Look at this. Local. Look at this. There's nothing here, right? Why? Because it only closed through 1 on the 5-minute chart. Now, what if we go to the 2-minute chart, let's say? What can we see? Wow, here you go. This guy. So you can use these guys as sort of a POI, like so. You can use these guys as sort of a POI, like this. And when price hits these POIs, you want to see those displacing candles happen in that same direction. What do I mean by that? What I mean is you have something like this. You have this down close displacing candle, right? So then you want to see another down close displacing candle to say that, oh, yes, you know what? I like this trade. This trade is going to go well. So you have everything done for you. So with this algorithm, basically you have everything done for you. And if you take this one step further, right? If you are a time and price maniac, we also have the market phases right now, right? Which tells us, okay, we are currently in a higher time frame distribution, okay, or a continuation, depends, right? Depends. We need to be able to analyze that properly. So I'm giving you the freedom. We're in a higher time frame distribution or continuation. Okay. Now, if you're in a continuation, then chances are this is like a reaccumulation before it goes up. Okay, that makes sense. Now, within the scope of this reaccumulation, which is the retracement, we are having a late distribution or a continuation, meaning we could be distributing to the downside. So now the higher time frame is saying, okay, we're having a continuation, and the sub-interval phases are saying, okay, this is a late distribution, meaning within the scope of this retracement, it's a distribution. How simple is that? Extremely simple, right? Now, if I take you guys back here, let's say, for example, let's go back to the beginning of the New York session, right? So that's 7:30. Let's go to 9, right around here. Okay. Now, at 9 o'clock, if you go to the 5-minute chart, what can you see? You can see that the market faces in a manipulation or distribution. So why is it saying that we're in a manipulation or distribution? Could this be the manipulation? This one here? Could this be the manipulation? Oh, yeah, can, right? Accumulation, manipulation, and now distribution. So this is the manipulation. Okay, until 9 o'clock, we are having a manipulation. Good, we had the manipulation. That means for the New York session, we are expecting a distribution up, right? So meaning accumulation, manipulation, distribution. So if that's a distribution that's about to happen, okay, if this is a distribution that's about to happen, how are we going to use that? How are we going to use that with displacement? Well, let's see. So time of day, let's wait till 9. Okay. Now look, distribution continuation, time range phase, early distribution or continuation. So we know it's a distribution. So we can select early distribution. But this is early distribution. What we will do? We will use POI, simple. We will use, for example, inverse gap here. How is this an inverse gap? Look, bullish candle goes up, reacts, and then fails and goes higher, right? So that's why it's an inverse gap. What do we have here? Bullish displacement. Okay. If you want to take this to the lower time frame, let's say 3-minute, 2-minute, no need to go to the 1-minute. Okay. So let's go 2-minute. We see if it's clear. Okay. Here we have this bullish displacement. Yeah. So now what we can say is, okay, fine. I have this. Let's do this. Okay, fine. I want to do that. Now let me buy. Let's say random. Okay, I want to buy. I buy. Stop loss where? Keep the stop loss below the low. Okay. Now I did not trade this. Okay. I only traded it from the low. I did not trade this specific move from here. I traded the low from here. Now, if I know that this is a distribution up and I can see that my statistical distribution is up over here, here's what I can do. I'm using this statistical distribution on the 15-minute chart. Okay. So go to the 15. What we can do is wait till it loads. Okay. Now I can see, okay, I have D1, D2. So let's go D1 to be safe. Okay, easy take profit. And what we can do is we can do this and do this and we can do this. Now we have the displacement, we have everything for us. Wow. Now consider this. We have everything for us, right? Now if you play this, okay, if you play this like so, look at the time. We're in the distribution range. Yeah, it's a range of time. the range of price in which you can use as a POI to sell, because higher the day has formed, everything like that. Now, over here, there's nothing local about this. There is no displacement. So I'll go to the lower time frame. Let's say 6 minute chart. Do I have anything? Yes, I do. What do I have? I have this guy here. Yeah, but there's nothing over here, right? Now that's a subjective take, extremely subjective. So how am I going to deal with this? Well, we'll go to the 5 minute. Nothing on the 5 minute. You can see there's nothing on the 5 minute. There's only one close, two close. That's all. So this is a two close. That's correct. But where is well, it's not getting highlighted? Not getting highlighted. Then what? Don't do it. Don't take it. Yeah, if it's not getting highlighted, don't take it. So what are you looking for? Let me go to the lower time frame. See whether this was indeed, was it a displacement or not? So let's see. 3 minute chart. Don't have. 2 minute chart. Have. So what we'll do is we'll do this. Okay. And when price comes there, what we will do is we will take a sell. Stop loss above this. Yeah. And what are you actually targeting? Yeah. What are you actually going to target in this case? You are going to target what? Want to see price try and revert to the manipulation that happened earlier on in the day. Meaning, look at this. You see how we have this manipulation here? Okay. Now we have a range of manipulation as well. So if you look at the range of manipulation, that's about to show, it's here. So if I can target just this, right there, there might not be enough volume, but if it can happen, right? Okay. Okay, good. Now we go back here. And now as we were discussing, okay, here's the level. And now we're looking for that bearish displacement candle, which is this. Yes. So now, what is the premise of this? You see, it's showing bearish, right? It closed below the closing price here, this one. Okay. If this doesn't make sense to you, if it's not clear to you, what are you going to do? Look at more candles. How are you going to look at more candles? Go to the 3. Can I see anything? Okay, this candle here, close below this closing price, close below this closing price. Perfect. That's perfect. So now I know that, okay, we're displacing lower from this displacement candle. Uh, Maybe I can take a sell. Let's say, assume, right? Now time of day is dead anyway. Don't take it. I'm not going to take it, right? Here. I mean, I did take it on demo actually. So here, stop loss here, above the high actually there. Okay. We're going to have that same idea, that same take profit right here. Okay. Like so. Okay. Now, the market phase itself is distribution. So yeah, we are distributing. For New York session, we are distributing. Perfect. The next day, what's going to happen is going to be a continuation. Or what? Continuation or accumulation. Or the next day is going to begin as accumulation or manipulation. Right? That's all. That's all there is to it. Okay. So if you do want this, you can definitely get it if you want, right? Now, if you take into account, let's say Bitcoin, if you apply this, not Bitcoin, let's say NASDAQ. Okay. Oh, wow. Holy shit. Okay. If you look at NASDAQ, I haven't looked at it today. Look at this. Okay. Here's the daily open, 6 o'clock. That's the manipulation in the manipulation range. And then if we are manipulating here and we start to sell off, well, of course, manipulation goes to distribution. And there's a distribution where you can form the low of the day. Yeah. Where you can form the low of the day. Simple. And now if we start to expand higher from here, where we're going to go? D1, D2 over here. It's simple as that, right? So now let's see how this looks like on the 5 minute chart. Forget the statistics for now. Look at this on a replay mode, on replay mode here. Okay. Take a look at this. Okay, accumulation. What are we thinking? We're thinking, okay, if we hit this manipulation level, then this is manipulation. Okay. First phase is manipulation. I'm looking for price to sell. Okay. And then it sells off. Perfect. Then 9 o'clock onwards, which is around here, you're expecting price to distribute. Okay, distribution also. Perfect, done. Time range, early distribution. Yeah, time range is early distribution. Now look at the time range phase on the bottom right corner. Okay, just look at it closely. As I play this, it says mid distribution, right? It says mid distribution. So what else? That's simple. That's all, right? You look for another distribution. Done. Simple. Now we can make changes to this to make this a bit more easy to understand, but that can be done. But this is as simple as it gets. Now, if we take this again to the previous day, let's say here, let's see what the stats did. Okay. Here, price accumulation or manipulation. Fine. So in this case, it is manipulation because it goes into the manipulation level. Okay. Because it goes into the manipulation level, the next phase between 130 and not one, yeah, between 130 and 9. It's not 130 and 4, it's 130 and 9. Actually, this is a micro phase, so it makes sense. Between 130 and 9, I'm looking for a distribution down. So perfect. Okay. Now, as we go into the New York session, because we knew that the initial phase was manipulation, this is distribution. The New York session is going to be distribution or continuation, right? We're going to distribute or continue. So in this case, you can see we started distributing up. So then what was the entire purpose of this? We came into the low of the day and now we're distributing. Okay, done. Simple as that. It is not rocket science. Yes, manipulation, distribution. Sorry, manipulation, distribution, continuation, right? So it continued and then colors finished. After continuation, we begin a manipulation. Done. Poof. Gone. Finish. Gone. Done. Zoom. Poof. Push. Simple as that. Okay. It's damn easy if you get this, right? Take a look at Bitcoin. See how it's slowing down after it met the high of day range. Done. Look at gold. No, not to worry because the day is done for gold. Settlement price is at 2 o'clock, which is right. Where is it? Where is it? Where is it? Right here. Okay. Simple. Don't do anything. Don't touch it. Right? So this is what's possible. And if you look at this from the lens of, let's say, the 15-minute chart, you can see when the displacement candles are there, oof, easy. You can catch local bottoms. Okay, here's a displacement candle. Boom, let me buy. Of course, you also need to see what? You need to see volume, which is why I have this volume spike and the 90-minute cycle defining ranges. Everything is there in this algorithm. Every single damn thing that you can ever think of is there. Literally. Okay. So today, simple. I also quoted the inducement in the 90-minute defining range. You can see that, okay, you know what? Here we break the low, boom, right here, boom, induce sell. Wow. Break the high, boom, induce buy. This is the buy that we took today. Okay. And let's go on to another range. Let's say over here. This one did not fulfill. That's okay. Here, let's see. Here we break the range, induce buy. Wow, okay. What else is there? Right now, nothing. So right now we have the range, we break, it did not induce, it's just going up, don't know why. It's supposed to go down, it's supposed to go down. And yeah, simple as that, right? So view this on the 15-minute chart to have a better macro view of things. Maybe you missed something, maybe you missed an inducement. There you go. Take a look. Here's the high, but the low is somewhere down there. Here's a break. Here's the inducement, which price never hit. Here is the high. Here's the low. Here's the inducement. Price hits it and it's going up. Well, unfortunately. Okay. So that's as simple as that. Now, think about this. If I activate the engulfing function, not engulfing, my bad. It's not engulfing. Okay. It's not engulfing. I made a mistake in saying that. It is not in any way engulfing at all. Okay. If you activate this feature and if you go to the 5 minute, okay, at the point of inducement, we saw that the inducement point was here, right here, right? Now, if you know that, okay, fine, that is my inducement point, then what I need to do after that is essentially as simple as finding the displacement candle over here. So go to 3 minute. Do I have it? No. Go to 2 minute. Do I have it over here? Yes. See that? We have it. Boom. That's your POI. That is your displacement candle. A candle that closes more than two or more, essentially a candle that closes above or below two or more other candle closes. That is your displacement. It is not the fact that you have a fair value gap. No one, and I repeat, no one in the institutional side gives a shit or even knows what a fair value gap is. They just, all they know is there liquidity, is there no liquidity? It's as simple as that. Okay. So as you guys can see clearly, this is extremely helpful. I will be rolling out these updates next week. Especially the 90-minute defining ranges and all of that. So you can use that. So what the 90-minute defining range does for you is basically this, right? You wait for the 90-minute defining range to form. And after it forms, you wait for the break. It is as simple as that. You see, you have a rule-based system now, okay? Now, let's talk about it, right? Look at this. Take this out. Okay, let's come back here. Let's look at the buy that I took today, right? So now okay, fine, here. We know that, okay, I want my 90-minute defining range to form. Okay, fine. Waiting, it formed. Okay, fine, it's done forming. And now this is my point of inducement. So I'm waiting for that, right? I'm waiting, or I'll go to another time frame, a higher time frame, and see, okay, am I missing something? Am I not missing something? But in this case, I know I didn't miss anything. So it's a 5 minute chart. I know it's going to go for that low. I'm waiting, right? So now watch, waiting, waiting. Okay, we took it. Now you can see here the volume was spiking, right? Now when the volume spikes here, I'm looking for that same thing for the change in the state of delivery, right? I'm looking for the change in the state of delivery. So in terms of where a inverse fair value gap was, I don't care. I'm waiting for this price range itself to give me inverse fair value gap. See, not giving, not giving, not giving, not giving, and then it just goes one more time. Okay. Now, it goes one more time into the 50% perfect. The volume spikes again. Right. Then the volume spikes again. Listen, I'm going to the 1 minute. Going to the 1 minute. And listen, you might say, Sean, why didn't you go to the 1 minute over here? Even if I did, where is the inverse? Right? Where's the inverse? Sean, here's the inverse. Isn't this the inverse? Correct. But look at the time. 5 and then 6. London finish. So I'd rather entertain this setup during the dead zone, because dead zone will go for liquidity. Okay, now listen, now watch carefully. I'm watching, 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 nothing, nothing. Oh my goodness, nothing. And then what do we have? We have, look closely, look closely. This candle, right? One, two, oh, sorry. Yeah, one, two, three candles have been closed through, right? Where's my inverse though? Where's the inverse? Still don't have. See this fella? There. Volume imbalance, reaction, fail. That is my inverse. Can you see? Can you see that? Okay. Sean, what happened? Where's your stop loss? Ah, don't worry. My stop loss is down here. Don't worry, my friends. Don't worry at all. My stop loss is down there. All right. Everything is engulfing. So it's still going to be here. And now what's the difference now over here? Nothing. I'm waiting. I'm waiting. Waiting. See this now. This gap caused a reaction down and then it failed. You see that? Okay, that's the inverse, right? And I know I can take this because it's happening within displacement candles. So what? highest of the highest probability. Boom, boom. My TP was near the Asian high. Could have gone higher, but whatever. Yeah. And now, watch this explode. All within the framework of the defining range. You see that? When you get it right, you get it right, guys. Simple as that. So what you can do is you can wait for that defining range to form and then go and do whatever the hell you please. Simple as that. Right now also, if you go to the 2 minute chart, yeah, yeah, 2 minutes, that's the candle there. What we said was we are going to do this. Okay. So still it is still going to be used as a reference point. Fine, cool. Let it be used as a reference point. Okay, let it be used as a reference point. Simple. Okay, so I hope you found this insightful. I hope you found this insightful in terms of how you can use this along with my algorithms and how we can use my algorithm in general. Uh, as you know, I'm running the lifetime offer. I'm repeating it. I'm going to keep on repeating it because I need as many users as possible to see the difference that it can make. And if you are willing to support me, please do support me by getting the lifetime offer. Uh, this is going into a big venture. We're looking for venture capitalists to back us as well to make this a full-blown project. So I would need a lot of user reviews and a lot of, uh, user relationships. So if you are interested, I highly suggest getting the lifetime offer, which is at 400 bucks. And the Black Friday deal is coming for next year's monthly subscriptions, which is going to be $100 per month. But with the Black Friday deal, you will be getting it at 40. Okay. So that's it. I hope you found this insightful. Good luck and good trading. Everything is in the description below. Bye bye.